All right, so BBIG was down about 13% today. It did show some strength though coming into the second half of the day. Thank you to everyone who joined me on the live stream. It was very fun, very appreciative of that. So today was the day where short-term speculators got absolutely slaughtered. Majority of the weekly called options were down at least 50 or 60%. So just understand that is completely normal with these short squeeze plays. There's tons and tons of volatility. We're dealing with some of the juiciest premiums for options contracts in the entire marketplace. Market makers are going to try to milk out as much money as they can selling these contracts to you. This goes for call options and put options. So absolutely no one is safe, and that's why I always encourage everyone to manage risk and be extra careful. It doesn't mean we can't continue to keep ripping up to infinity and beyond. It just means that we have to be aware of the potential, because we've seen it in the past, guys. I don't want to see them crybaby bag holders. Anyways, drop a like. We're gonna get right into the recap right here. So moving in here to the 5-minute chart, we can see what exactly happened. So there was a little bit of a bull trap in after hours yesterday. We were pumping, and we've seen this before where it pumps up in pre-market. We continue to pump into the day, and we saw that yesterday, right? We pump in after hours, but pre-market there was what appears to be a coordinated sell-off. Now, right at 4 a.m., we start moving down all the way until 7:30 a.m. Now, I don't know about you guys, but I didn't even wake up until 8 a.m., right? So this all happened while I was asleep. I'm just going to make the assumption that most of retail was not awake selling. So what I do think might have happened was some manipulation here. You make it go up in after hours, get everyone juiced, and then as soon as pre-market hits, boom, pull that rug just a little bit. Now that bearish pressure we experienced in pre-market did in fact carry into the rest of the day. There was tons of call selling going on, de-risking, IV crush, all of that jazz. But we approached this 50% fib level. We saw a decent bounce, and we broke out of this fib level, especially in after hours trading. We did see a nice push back up to 485, and now we're using this fib level as a nice little support level. Another thing to quickly mention is that the volume today was 175 million. We were over 300 million as of yesterday, 200 million as of Friday. So it was a lot lower than Friday and Tuesday's trading days. Lower volume could definitely be a sign that things aren't as juicy as they once were before. Overall, I'm sticking with my conviction that this week, the gamma squeeze week, is probably better to be offloading than to be onloading, just in terms of risk to reward. Another thing to keep in mind is that the Google trends right here did peak out yesterday, right? So it did correlate with the high volume on the stock. Today at 7 a.m. it did see a similar peak in terms of Google trends, but it did fall back down, and it did not see as high of search engine volume as it did on Tuesday. Now, something that's funny about the Google trends is that if we scroll down here to the related topics right here on Google, you guys can see Nancy Pelosi, Speaker of the United States, is a related topic to BBIG. Let's go! Let's go, baby! Oh, I absolutely love this. This is absolutely phenomenal right here. BBIG and Nancy Pelosi are related topics according to Google. I wonder why. Anyways, looking at Market Cypher, Market Sniper, again, guys, the weekly chart is still on a negative momentum wave. This could cross over in the next trading week. Just keep in mind, on a weekly basis, longer term perspective, there is potentially still room to run. So even if the day-to-day price action isn't looking as juicy, it doesn't mean that this can't be a multi-week runner. I'm not saying it will be a multi-week runner. It can do anything it wants to do. I'm just saying in terms of the weekly technicals, it could very well be that. Now, going into the daily candlesticks, it gets a little bit more spicy. The momentum is definitely on the upside. The VWAP is curving down just a little bit there. We could continue the momentum, but it is getting to that point where it's starting to curve down. Moving into the 4-hour chart, we did get a nice buy signal here right towards market close. We got that green means go buy signal on the hourly chart, which is pretty solid considering we also have green money flow right here. So essentially what we want to do with market cipher when there is green money flow like we're seeing in BBIG stock on this hourly candles is that when the momentum wave goes to the downside like we're seeing right here and crosses over and starts trending back up, that green dot is a hammer in them long signals. It doesn't mean we go back up to where we were before at $6 per share. It just means we are likely to trend upwards, and it actually did print this green dot before we moved up in after hours, which actually did have a pretty nice push right here. Quickly thank the sponsor of the video, Moomoo, where they're giving away 1 free share of AMC as long as you deposit $100 on their platform. The offer lasts until February 7th, 2022. It's a 20% return right off the bat, actually about 18% return, but who's counting? On top of their already great brokerage promotion where they're giving away up to $7,000 as long as you deposit $1 on their platform. So there's no brokerage doing a better promotion than Moomoo is. Sign up using the links below in the description or pinned comment section. Get your free share of AMC. Get some free stock. Everybody wins. BBIG is not here on the threshold security list, but it likely will end up on this list because there's definitely tons of failure to delivers going on in this stock. It almost always happens with highly shorted stocks that are trending up like this. BBIG is a threshold security. It just has not made it to this list as of yet. BBIG also moved up on the short squeeze leaderboard, now in 5th place. It has the highest market cap of the top 10 companies besides for Blink right here. And if you erase all the companies under $100 million in market cap, BBIG is number 1. Looking at the short share availability, there's absolutely none here. If we scroll down to that short volume ratio, it's 59 as of yesterday. It's extremely high. They continue to short this stock to oblivion. Cost to borrow on Ortex went up to 102%. The max cost to borrow 300%. This is a sign that it's getting very difficult to continue to short this stock. We also saw the utilization drop down to 99%. I'm going to be paying attention to that greatly. 102 million shares were actually returned today. So potentially there has been some short covering. The utilization dipping is usually the first sign that you see that shorts have actually covered. But all in all, Ortex is going to be late when it comes to reporting short covering. So I don't pay too much attention to it at this stage in the short squeeze. What I really like to pay attention to is the whale flow, and what we saw today was a very interesting day. It was pretty much 50-50 throughout the day. It was leaning bullish, about 60% bullish. Tons of bullish bets actually came in before close, and a lot of them were betting on the 2-day expiration, meaning that we move up within the next 2 days. Most of them were within the next week or so. 128 was being played as well, but also we got some 414s, so some April call options as well. But what I really like to see here is the fact that going into close, 30 minutes into close, it was all bullish bets. Bulls mainly going for the 414 and the 121. Bears are mainly going for the February 18th. Bulls mainly going for the $5 strike price. Bears going deep in the money there at the $9 strike price. So the options volume today was not as high as yesterday, but it was still pretty high. We might be having something like this going on where we get a call option volume dip and then we rip and then we see a new high. That could be the case, but historically speaking, again, looking at this chart, when the call option volume is high, when it is high, it's a decent time to be selling right here. Decent time to be selling. Decent time to be selling. So now that call option volume is high again, like I said in my previous videos, it's time to be thinking about selling, in my opinion. Buying is where it gets a bit risky at this point, just because you're buying it at a bit of a premium. It was at like $2.20 about a week ago. You're paying about double that price right now. So again, it's a bit risky. Not saying it can't continue to go up. It can definitely continue to rip like crazy, and I'm ready for it when it does. But historically speaking, when the call option volume spikes during these gamma squeezes, that is when smart money is typically selling. Biggest option trades of today were actually pretty interesting. The biggest bet was selling a $10 put expiring on 121. Now this trade was likely matched to buying this $9 put expiring February 18th. So the biggest whale of the day expected that the stock price goes up into this January 21st expiration, but down into the February 18th expiration. In my opinion, that totally makes sense. That's a logical trade. There's also been selling of call options. That has been kind of the theme that we have been seeing over the past few days. Tons of whales are unloading their call options for a significant profit. And then 3 of the trades were buying a put option. One of them was a multi-leg strategy right here. And then 2 of them were attached to, again, that biggest whale that we already went over. Looking at the multi-leg strategy, they bought an $11 put expiring on Friday. They sold a $10 put expiring on Friday. This trade is in fact a credit spread. They're essentially betting that this does end up below $10 a share as of expiration Friday. Max pain for the January 21st expiration or Friday's expiration is at $4.50. This is the price of the underlying that would cause the most amount of options contracts to expire worthless, out of the money. The stock price tends to gravitate towards the max pain, and it did move up. This was at $4, now it's up to $4.50. Lo and behold, BBIG is at $4.53. So the theme of today is option holders are getting absolutely burned. A ton of put holders as well, right? A bunch of people, BBIG's done so. They buy puts here. They buy puts here. Those people are getting burned as well. It's not just call options. It's puts too. Gamma exposure is pretty much the same right here. We have a bunch of gamma exposure at that $5 strike price. So if we can push over that $5 strike price once again, it should send us a bit higher. And then the $6 strike price as well has a decent amount of gamma exposure. Once we go past $6, there is not too much gamma exposure. So the theme of BBIG week is risk management. Yes, we can continue to rip. Gamma squeezes could be extremely volatile to the upside, but nothing is promised in this market. So managing risk is always that #1 priority. If you don't manage risk properly, it could always take one trade to blow up your account, and I just don't want to see any of that. So be very precise and careful with your investments. Other than that, the whale call buying into close was a very good sign that good things are to come of tomorrow. Also, market cipher showing that we were oversold on those shorter time frames, such as the hourly and 30-minute charts. I do think we continue to run here, but nothing is promised, like I said, so manage risk accordingly. I hope you guys have enjoyed. Drop a like if you guys did. Subscribe for more content, and also if you wanted that one free share of AMC stock or up to $7,000 in free stock, sign up for Moomoo using those links below in the description or pinned comment section. Anyways guys, that's about it. See ya.